Hello, I'm Robert, and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. Normally, I would be uploading a 30 to 60 second short discussing the current EURUSD market, but I felt that this market needed a bit more than what I could say in 30 to 60 seconds, and I wanted to go into a bit of a deeper analysis. So let's get straight to it and talk about what we have on the screen. This is the Oanda app with the order book overlay set up on the screen. I'm looking at Euro USD on a 1-day time frame. Current order book resistance is at 1.087 and it is reasonably strong. Order book support is at 1.080 and it is quite strong. I don't believe support is going to be broken, so I don't believe the bears are going to be able to push the price down lower than that level, and we can see it on a chart quite easily. So looking at the chart, we can see the resistance level right here, and it is quite aggressive and very strong. This is in fact where the where the lower wick of the candle has stopped. And we can also see right above the price action the support level that shows it to be very strong as well. Now, as we look at this market and we try to plan out exactly what we're doing, we see the bearish cycle that we've been in for the last 6 weeks. But there's more to this than what we can see, because as we look at this market, we are actually in a bullish long-term cycle for Euro USD. Now, we can't really see that looking at this chart, that this is a bullish cycle. But if we go to the weekly chart, now you begin to see a bigger picture, and you see where the bullish ran. Well, the bulls have been running quite aggressively. Whether or not this bullish cycle is losing momentum is a different story. It looks like it might be, but nonetheless, it is still very bullish. And that is a problem for long-term planning versus short-term planning of your trading. So as you look at the market, this isn't just a clear cut, it's a bearish run and go to town. Even though we have had 5 consecutive weeks of bearish aggression, that's not the whole picture. And here you can see there was a 4-week cycle of bearish aggression. But yet, when you look at the entire run, the bulls still hold the market very strongly. And that's something that we really need to focus on as we figure out the trade directions that we are actually doing. I have been in this market for 28 weeks. So basically, I got into this market roughly around here. Kind of in the middle of where we're at now for the bullish run. Basically the end of December of 2022. This has been the market I have been working in. But when you look at the whole picture of what this market represents, it paints a very different tale. And the story is quite different when you look at the order book itself. These are just some of the many things that you need to take into consideration when you're planning out your particular strategy. Whether it's a short-term get in and get out, as the last 5 weeks have demonstrated, or a longer term where you plan on being in a market for 6 months to a year. You must really focus on exactly where you are at within the market. Because if we go back further, we can see long term here was a very long bullish cycle, bearish cycle. So this bearish cycle brought quite a bit of profits long term, but you can see short term bullish upticks. And that's the importance of looking at the market in both ways. Because a long term bullish market can have short term bearish cycles. And the contrary is also true. A long term bearish market could have short term bullish cycles. So as you look at your charts and you look at the directions of what you are trading, we can see that we are basically 5 weeks back to where we were. Price action right now is all the way back to here. So basically this becomes a longer term support zone that looks like it's going to continue upward, as it's been tested several times. And zone means that the area is not precise, because we see that the wick here dropped below, but it is still within the zone itself. So you need to give yourself plenty of space for the zone. But this is where a good place would be for a longer term entry point if you're looking for the market to move in your direction upward. Short-term, long-term basis is critical in understanding when you look at the overall principle of the market cycles. Here you see another longer bearish cycle, and you see how the order book reflects in terms of pricing. And you can click on a specific cycle and get the idea of what the order book looked at that point in time. So there are a lot of tools and resources you have at your disposal. And when you really look at how the market is going, you begin to see the longer term range. The order book gives you a very clear point of view of where the range is and where the trend is. So by looking at support and resistance and by honing in on how you want to trade the market, you get a clear picture to work with. And if you want to even get a bigger picture of the market, we can see here the longer scope of the bearish run on a much bigger approach, and now the current bullish run that does look like it is losing momentum. But then again, it might not. It's not something you can really take for granted, because here it looked like it was losing momentum, but then it rallied a little further. So as you plan your trading, look at different levels. Look at where the market says it is going to be. And you can see clearly and consistently within the order book exactly where buyers and sellers are gravitating in terms of their capabilities and in terms of where they think the market is going to be. And you can see there's going to be a few stragglers along the way, looking at various points within the market where they think price will go. These are important points to pay attention to, particularly if you manually trade, as they can help you gain a better understanding of the spread of the market to plan out a worst case scenario. As we look at the chart on the screen, we can see multiple levels of support and resistance. For example, we can see right here, this has been tested several times. And even though it had a breakout, it retraced back to that point. Now from here, we seem to be at a kind of a decision point, whether the bears are going to take control or the bulls are going to hold on to control. But we can clearly see the order book suggests that the market is going to go up even further, as there is more weight on one side of the order book than the other. So the driving force is for a higher price versus a lower price. So as you look to your different types of trading techniques, it's worth considering having 2 or 3 sub-accounts with small amounts and aggregated portions that can take advantage of both short-term opportunities and longer-term opportunities. Let me know if you like this longer analysis approach or the shorter 30 to 60-second approaches. Leave a comment below. Like this video to help the YouTube algorithm, and thank you for watching. Until next time.